Hello everyone and welcome to my channel. Today, I'm taking you through the history of economic thought. Then, we'll see how all this is reflected in what we called modern economics. My name is Arnaud Delapierre, and I love sharing everything I've learned in the financial field. What brings us together is the desire to understand how the great pulse of the economy works in order to better manage our finances. Our theme of the day highlights the general principles that have shaped our system, our systems, our exchanges, and our ways of life. Settle in comfortably, we're starting. Exchanges and trade have existed since antiquity, but our ancestors did not view the economy as we do today. At that time, the organization often relied on barter and local resources. Some empires already had currencies, which allowed for the establishment of trade routes and to encourage specialization. Gradually, the regulation and management of these flows expanded significantly, outlining theoretical foundations that are still present today. Thinkers like Adam Smith, David Ricardo, and John Maynard Keynes then revolutionized the understanding of financial balances, paving the way for new approaches in economic policy. The notion of modern economics refers to a set of dynamics where industry, innovation, technological in the full sense of the term, and finance intersect. Before the Industrial Revolution, production remained artisanal and scarcely mechanized. Then, with the emergence of much more efficient factories and tools, productivity surged. This growth was accompanied by increased complexity. There was a need now to coordinate logistics, bank credit, and risk management on a large scale. Gradually, governments, businesses, and households had to adapt to new challenges such as market size, international competitiveness, and the preservation of certain resources, certain strategic resources, to be precise. Before we go further, I would like to give you a parenthesis to talk to you about an app that assists me in my trading decisions, the Notrade app. Available on iOS and Android, it is free and yet remarkably effective for spotting opportunities in the markets, financial or crypto for that matter. It is not just a simple gadget, but a true ally for identifying the trends and adjust your strategies. Its interface is clear, which makes it accessible even to beginners. If you are looking for a reliable service to trace a better path in your trades, Notrade is a tool to test without hesitation. Let's get back to our topic. One of the pillars of the modern economy is the famous law of supply and demand. When the supply of a service or a good is greater than the demand, prices tend to decrease. Conversely, when the demand exceeds the production capacity, prices rise, they create in most cases. These dynamics guide profitability for producers and cost for consumers. Governments observe these trends to adjust various measures such as taxes or subsidies. Understanding this mechanism counts enormously for evaluating the impacts of a new product on a market and limiting losses related to an imbalance. Generally, two main branches are distinguished. The first is microeconomics, which focuses on individual behaviors, businesses, households, etc., and macroeconomics centered on the activity of a country or an economic area. The first analyzes decisions made on a small scale, price setting, competition between firms, consumer behavior, etc. The second focuses on global indicators, such as inflation, unemployment, or public debt. This broader approach helps to understand how fiscal and monetary policies influence our daily lives and why governments rely on these indicators to support investment or manage crises. Adam Smith popularized the idea of an invisible hand that would harmonize individual and collective interests as soon as each one seeks a gain. Subsequently, Keynes emphasized the role of the state in stimulating or restraining the economy, particularly through fiscal policy. Milton Friedman, on the other hand, supported a more liberal view, focusing on limited regulation and giving priority to monetary stability. All these economists have left their mark on today's decisions, reminding us that the balance between free market and public intervention is often delicate to manage. Globalization has changed the game by allowing goods and services to move quickly across borders. Companies saw new opportunities to establish themselves abroad, while consumers have access to a wider range of products. This has also led to adjustments in economic structures, as some productions have been relocated to gain competitiveness. Sometimes, this openness has sometimes involved generated imbalances, like the deepening of debt, the exacerbation of certain inequalities, or even environmental degradation. Therefore, we must juggle challenges to maintain balance. The financial sector now plays a major role, as it facilitates the circulation of capital and supports project financing. Banks, insurance companies, and financial markets are channels for directing money towards profitable activities. Thanks to technological advancements, transactions are faster, and investment possibilities have expanded. However, financial instability can occur as soon as there is panic or a lack of confidence. Historical crises like that of 2008 show us that regulation and transparency remain crucial to avoid damage to the real economy. Technological innovation is also a powerful vector of transformation. The Internet has revolutionized commerce, communication, and information management. Now, a startup can be born in a small space and reach a wide to the public thanks to online platforms, for example, blockchains, artificial intelligence, and the rise of big data or other avenues of development. Many professions are transforming or emerging, forcing workers to continuously train. On the other hand, these rapid changes raise questions about privacy protection, the concentration of power, and the distribution of wealth from these new technologies after you. Yeah, supply chains have increased in complexity. The just-in-time model became all the rage to reduce storage costs, but it can also weaken production in case of unforeseen events. A supply disruption at one stage of the process can affect all the companies downstream. Recent health or climate crises have highlighted the need to adapt these chains to become more resilient. It's about finding a balance between immediate profitability and systemic robustness, knowing that a local shock can now spread quickly and trigger a chain reaction in different sectors. Ecological issues are taking on a growing importance. Companies and states are increasingly pushed to integrate environmental impact into their decisions. Energy transition policies and the development of infrastructures, green infrastructures we mean here, become priorities for many players. In financial markets, we also see the emergence of labeled responsible or green products that attract, we can say that, investors concerned about the carbon footprint, even if they may not be the majority. However, the transition to less polluting production methods often involves a significant initial cost, hence the need for mechanisms of encouragement. The idea is to reconcile economic development with climate preservation, a central challenge for the coming years. Cryptocurrencies have burst onto the scene, revealing unprecedented possibilities for exchanges and value storage. Bitcoin, for example, has emerged as a decentralized form of money, partly escaping central banks' control. Some see it as a way to protect their assets against inflation, while others believe it is a speculative sector with major risks. Regulators are beginning to establish a legal framework oscillating between preserving monetary sovereignty and supporting innovation. For investors, this asset class proves to be interesting, but it requires increased vigilance and a good understanding. From an individual perspective, understanding the main principles, economic understanding helps make informed decisions in our daily management. This ranges from creating a suitable budget to selecting investments aligned with our goals. Knowing how markets react to rising interest rates or how public debt influences financial stability allows for better anticipation of certain fluctuations. When it comes to these mechanisms, impulsive decisions are minimized and coherent opportunities are more easily seized. Finally, continually staying informed and following economic developments remain an asset for building a sustainable strategy. To conclude, we can see how much the modern economy is made up of various mechanisms that influence each other. Whether we talk about supply and demand, politics, public policy, innovation, or even international exchanges, everything is interconnected in a vast whole of interactions. We hope this overview has allowed you to appreciate the diversity of these concepts and find some ideas to sharpen your thinking. If you enjoyed this video, feel free to subscribe and leave a like. Thank you for listening, and we'll see you very soon for a new exciting topic on this channel dedicated to finance.